Good morning, everyone. Good afternoon, everyone, too, depending on which region that you are listening to this event. I am Chor Teh from Investec Bank. First of all, thank you very much, BVD, for giving me the opportunity to join this brilliant forum. I feel honored to be part of this excellent event, and I'll try my best to keep this session as interesting as possible. So, a bit of background about myself. I have been with banking for more than 15 years, and I've done all kinds of roles from operation, change management, client service, relationship management, regulatory roles, and now in the KYC onboarding space. These working experiences provided me very valuable insights into the pre and post onboarding and certainly add values to the best practice in my current role. I currently run the Client Lifecycle Management team in Investec, and this function covers the usual new business onboarding, AML reviews, and offboarding. I also run a change function within the CLM space, focusing on system implementation, upgrades, as well as process improvement. Today, I'm going to share my version of story about eKYC and some case study, as well as how to make onboarding your unique selling proposition for the banks or organization that you work with. So I'll start off explaining why do I call my function CLM instead of KYC or onboarding or client take-on team. I personally felt that the CLM is better in explaining the breadth of work that we do. From the moment that my bank looked to take on a client, the business will ask my team, what do I need to get past KYC? Then when the business decided to go with this client, we will initiate the KYC process and get it activated or onboarded. The process unfortunately doesn't stop there. We know very well that we have a periodic review that we need to revisit the KYC paperwork based on the high, medium, or low risk. We also have to handle triggered event, which can happen anytime. Then my team gets heavily involved when it comes to offboarding, performing all sort of activity checks, closing down the accounts, systems across the entire network. This is just not it. When you have events such as Brexit knocking around, we will get involved with project teams to work out how or what to do for the clients that fall in and out of scope of Brexit. And the same process for many more of these projects or programs taking place across the bank. Not to mention the changes on the policies, the JMSLG guidance, the fifth anti-money laundering directive, and many more where we need to adjust or amend our process to fit. Lastly, almost every onboarding team that I came across with, they deal with slight variances throughout the onboarding process. So some they included the tax into the onboarding, some they include regulatory classifications into onboarding, some the onboarding team is tasked to maintain static data. So with everything that I've just gone through, we can tell that it is quite a challenging role, wearing two hats. One hat is the facilitating new business, and the other hat at the same time is controlling and keeping the bank out of AML risk. We definitely need to find a better way to manage the task within this role. These will lead us nicely into eKYC. So what is eKYC? When I first heard about eKYC, there are some of the keywords that pop up, and I've listed some of them here. So we will usually talk about electronic ID and V. So it has to be remote or it can be done remotely. There's a client portal, potentially a client portal. It can be done probably via mobile phones. It will usually be paperless or digital. There's an electronic signatures. There's a digital due diligence. Some of them, they are a little bit more advanced. They have AI or machine learning, almost that you see this as a real-time offering or almost a real-time offering for client experience purposes. Then in plain words, I would actually summarize the eKYC is probably described as the digitalizations and electronic concept that minimize the laborious traditional way of face-to-face physical documents or wet signatures. As much as I like the sound of it, I'm also equally concerned about the risk that comes with it. Let's talk a little bit about it. So it is not that we do not have these problems in the normal KYC, but in the space of eKYC, we are more exposed to this risk. Fraudulent document. How do we know that the IDs or proof of address is valid? If we then we heard a little bit about the digital discrimination. For example, taking selfie doesn't work well with people of a darker skin color. Finally, the headache of many people when trying to move to digitization. Remediation of all sorts to bring the data up to standards, standardizing certain naming convention, how to translate paper-based evidence into digital searchable data, the hierarchy, the business relationship, the client relationship, the single view of the client across the entire client base. Sounds like a messy place to start to get your hands dirty. The good thing is, these are all achievable, and certainly in the case of Investec, we are already quite advanced into the journey of eKYC. In the next few slides, we will take a look at how would an eKYC look like. Then I will share some insights of how Investec has achieved this. How would an eKYC look like? Here, you're going to see one of the examples. We'll take a look at it from a flow perspective. This is one of those examples of a simple KYC, simple eKYC, and this would probably remind some of you about the challenger bank in the UK, like Monzo or Starling. So it will start with a laptop or sometimes a mobile phone applications. There will be an online or smartphones, and then it will prompt for an ID verification checks. It will then verify the information against public source or sanctioned database, and then you will receive a welcome email. As you probably noticed, I've included two exclamation mark to show the area that requires a little bit more attention when designing the workflow. And this workflow will work on the three main products: online banking, online trading account, and online loan. Now, we'll take a look at a slightly more complex flow. So please note that I've highly simplified this as well. On this representation, you can also see how an eKYC would work too. This diagram shows a more robust workflow than the previous one. So again, it begins with a journey of laptop or mobile phones. There will be an online or smartphones that you filled in. Then you might extract org structure from a data provider, or you would have asked the customer or someone to fill in the org structure as we go along. And then it will go into an ID verification process, just like the first example. It will validate against public source or sanctioned database, and then all this information will feed into a risk assessment. And this will begin or possibly begin an endless loop or a repeated loop until all the risk assessment is satisfied. And then you will get a welcome email. Again, this diagram is showing that eKYC is very achievable because there are already data vendors or data aggregators who can supply org structure, additional company information, including financials. There are also many sanctioned databases readily available via API, and you can get the search result under one click. You would have also heard about many RegTech offering automated risk solutions, risk assessment, workflow solutions to be catered to your company policy. If you then bundle all of these up, you would have achieved what we call eKYC. Same as the previous slide, I've included several exclamation marks to show the area that requires a little bit more attention. Again, this flow will work on the three main products: the deposits, the lending, and trading. Now, let's take a look at the Investec case study. I'm sure some of you have heard a lot of success stories, and often there's a lot of caveats when you listen to any stories or case studies, and you might wonder, how would that apply to me and to my organization? In my personal view, we've got to first recognize that there are certain things that we're not able to automate. And it is very important that this may not be the silver bullet that you're after. If, for example, that your targeted market, your client base, is solely focusing on emerging markets. Now, if your client base is broadly similar to what you see on this slide, then there may be something that you can take away at the end of this presentation. To set the scene, this slide shows the complexity and wide ranges of offerings here in Investec. We have global footprint from Australia, Hong Kong, UK, India, EU, of course, and all the way to North America. We offer a wide range of products from lending, advisory, treasury risk management, capital markets, and we also service a wide variety of client types too. So limited, listed client, regulated, funds, GP, trust, SPV, and individuals. So my team has the responsibility looking after the CLM process to or the KYC process for business, client, and jurisdiction as seen on this page. So so you may ask, why do I show this page? This will set a good context when you look at the statistics on the next slide. This is something that you should see with a successful implementation of an eKYC, or in my case, a successful CLM platform. In 2019, my team is able to achieve an average of 95 clients per month across businesses that my team support, covering all types of clients, simple and complex, from global markets, liabilities, to lending and project financing. In this CLM platform, we've also enabled the possibility of same-day onboarding within and as well as within a couple of hours, whilst maintaining good control on data quality and accuracy. To give a little bit more insight into the stats, across the trading client, we managed to onboard 39% of our client within 1 week. And of those, 11% are on the same day. So this is a major transformation in Investec. The idea of sharing is to show the automation in KYC or eKYC in today's context is definitely possible and can be very robust. Clearly, to implement a CLM platform that is robust, efficient, and effective comes with lots of planning and groundwork. You should also never underestimate the much needed work on data cleansing, data remediation, and data migration that we've covered in previous slides. The thinking has to go beyond KYC, and you would need to incorporate all the business values, the impact to other operations team or the support team, such as the credit, payment, reporting when running the CLM program. The bottom line is all these are very achievable and the ROI is exceptional. This can be further evidenced in the next few slides. Now, how do we do it? So long story short, Investec Bank implemented a robust CLM platform using iMeta with integration to Orbis, part of BVD, back in Q3 2018. We have full integration covering the whole client journey, from business, my team, and finally down to downstream's operations. We digitize the group financial crime policy, automate the risk assessment, automate workflow, as well as streamline regulatory classifications. This setup brings flexibility in handling the regional uplift from our global footprint, covering various countries across the globe in one platform. Then we have API connectivity to external ecosystems, the Data Bureau, Sanction Database, ID and V Solutions Provider, Watchlist, and so on. As you notice on the slide, we are using BVD in our platform. The key here is how you implement it, and a good partnership with a vendor or an internal tech team if you're building this yourself. If this is done successfully, you should see the similar results or probably better than what we saw in the previous slide. Now, is this the future of KYC? In my personal view, absolutely yes. So KYC needs to evolve and definitely requires further push into the digitization. I personally think that the next thing in KYC is how do we maximize the ROI for the business so that the business bought into the values and joined us on the journey of eKYC and continue to provide support and partnership with us, the KYC team, the onboarding team, or the CLM team. I will also share another story on how we maximize the ROI for business. Some of you may have already seen this in other forums or webinars that I presented, but this is a good story and it is worth continuous sharing. Last year, 2020, CLM team has been seen as value add to business in the digital space. It is very important that having a robust CLM platform means it must be scalable to support growth and future growth. Q4 in 2019, we were working on digital business savings for UK corporates. We leverage and reuse the existing platform, but design a highly automated workflow with Portal to enable client self-servicing. We launched this phase one product just before COVID hit UK, and the results are staggering. We onboarded well over 1,000 clients in just 4 months and raised over £100 million. And at peak, CLM platform is activating an average of 20.2 clients a day on top of our existing throughput, which you have seen in previous slide. Obviously, we are nowhere near perfect. There is still much more to do and much to improve in the CLM space. We're still working very hard to achieve more. These will lead us nicely into next steps. Here you can see that I've highlighted 2 points: digital onboarding and continuous KYC or perpetual KYC. We'll start off with the digital onboarding. What do we mean by digital onboarding? So my version of it includes self-servicing. I think it is safe to say that self-servicing is likely to be the trend going forward. We are aware of the ease and the benefit that it brings to the KYC team. Better data quality, higher accuracy. Client gets to provide information or the personal information into a secure portal instead of back and forth via email traffic. This means less burden of dual keying, documentation storage to the bank as well as to the KYC team. My view is there is also another benefit that it brings is the out of hours flexibility. Often we notice that the onboarding requests are not something that the business of the client would do first thing in the morning. Quite regularly, they would do it towards the end of the day or when they're free or possibly over the weekend due to the preset impression of long dreaded process. Now, if we are able to offer the capabilities to handle these KYCs in non-working hours and digitally, it will bring a great improvement to client experience and process. The next thing that comes to my mind is the perpetual KYC or continuous monitoring. I talk a lot about this with various people, forums that I've attended because I see a lot of values in this space. It doesn't just mitigate the risk in KYC or financial crime, such as alerting about the changes in client data, ownership, sanction, or potential reputational impact. It also brings great value to reduce the time to market when performing a reviews. Because if the continuous monitoring is done on a daily basis, the client data is as fresh as of yesterday. With that, we will hopefully no longer get stuck or buried in the middle of the AML reviews backlog. More importantly, it will help massively when cross-selling an additional product to an existing client. The possibility in this space is truly endless. And of course, there are many challenges as well to achieve continuous KYC or perpetual KYC. The data, process, technology, and people. We need better data. You need to have a structured data that you can curate. You probably need to redefine the processes. You probably need to upgrade the tech solution that you've got. And finally, you also need to update or upskill your people digital capabilities. I've come to the end of this presentation. I hope I've not put you to sleep in the last 20 minutes. I hope you will find this session helpful. I certainly have found this session very beneficial to me, and to be able to share and at the same time relearn myself to see what else I can do more. If you have any further question after this session, you can drop me a line to my email here. Thank you, everyone.